everyone. Welcome to this week's installment of Mish's Market Minute. I am your host, Mish Schneider. Thanks again to StockCharts TV. I will start with an announcement that I will be taking a break, so I will not be back with a live segment until August 19th. I've made a bunch of evergreen segments that will fill the place. Good things to watch over and over again. Now, what I'd like to do today is a continuation of what we did last week, which was really talking about consumer staples. So some of them will be repeats because I think that they're worth looking at again. And then there'll be a bunch of new stocks because we're also going a little bit into leisure and entertainment, which some would argue are consumer staples, but others would argue are merely more cyclical. So in this particular time, I think it's really important to understand the consumer staples, things that we need no matter what, like food and beverage, versus things that we would do or possibly give up if things got tough, or worse, if we were forced to stay home because of the Delta variant, which, by the way, I sincerely doubt will happen. But that would be in the leisure and entertainment sectors. So what are these stocks really trying to tell us? I think we can tell a lot about what's going to happen for the consumer over the next few months from this. So this is preparing for life back to normal. I know we keep saying that. And then, of course, you get stuck with the variant, which of course we know right now seems to be affecting the unvaccinated. So we almost have a divided country between the vaccinated and unvaccinated. But regardless, both love to party, and that's what these stocks are really based on. So let's go to the list of symbols. You'll have this here to refer to, and now let's go to the charts. So let's start with actually PBJ, which is an ETF, not peanut butter and jelly, although very aptly named for the food and beverage ETF. So what's interesting is last week we talked about consumer staples, and a lot of the names that are in this group, like, for example, Tyson, are actually showing red now through this ETF, which is not so surprising considering what did we talk about last week? We talked about the fact that inflation and the rising costs of good, I don't know if you've seen coffee lately, but with a frost in Brazil, coffee prices went skyrocketing. Sugar prices are still high. So a lot of the grain prices are still high, although they've come back down a little bit from their highs. All of these things, I think, would affect the bottom line of some of these companies. And certainly we're seeing the impact right here to the ETF. So we are in a caution phase, which means we're under the 50-day moving average. We can see the slope on that 50-day moving average, which is in blue, is starting to point a little bit negative, which means the caution phase could be gaining in momentum. This is, by the way, where my stagflation theory comes from. It all starts here with things that we need costing so much money that it affects everything. And yet at the same time, we're still well above the 200-day moving average. And we did have a little teeny bit of a reversal pattern here. So as far as we can see, we're not going to get terribly bearish until we have a situation where the low from this day right here, 40.55, is taken out. We're trading at 40.74 right now. Oh, actually, I'm sorry, wrong low I gave you. This one, 40.48, is taken out. If that happens, then considering the momentum is declining and the leadership is declining, it's possible that we could see a move down. I don't know about necessarily all the way to the 200, but I would expect we could see somewhere around 38.75. So let's see if some of these individual stocks are following in kind. One of the ones that we talked about last week was Monster Beverage. Just the opposite, in that the Monster Beverage is actually above the 50-day moving average, which is slightly sloping up. And that means that this is in a bullish phase. So that makes the analysis on this very, very clear. Now, one thing I always like to say when I'm talking during earnings season is just that. It is earnings season. So you should always know exactly what your time frame is when you get into a trade, and whether or not you decide you want to hold into earnings or not, or wait till after earnings. We usually say that if you're in a position with a cushion, you can certainly hold into earnings, particularly if you've already taken some profit. If you're underwater, most likely best to get out and then look fresh after earnings. Now, even though this is above the 50, you can see right here on the real motion indicator that it hasn't quite cleared the 50, which again sort of states the case that even though this is strong, it may not stay that way. And of course, with earnings coming up in Monster Beverage at some point, I think early August, most likely pays to wait. Nonetheless, depending on what happens with the earnings, if it holds the 200, that would be one thing. If the momentum starts going up ahead of earnings, that's something else. If this gets through 95, all the better, because then it looks like we've taken out this base. But for right here, right now, all we can say is that 92.31 is our support. We can give it a little teeny bit of fudge here, say under 91.86, and we want to see that continue to hold up. The next one is another beverage we also talked about last week, which is Constellation Brands. And again, not looking so great. So that's kind of interesting, right? Because we've got these consumer staples, things that people need, down, partly because of commodity prices, but also, even though we know the commodity prices are going up, this is showing that people go to staples in non-cyclical times. We're still buying cyclical stocks here. There's still a prevalent feeling in the market of tremendous optimism. And of course, I'm not going to comment on that. That's just is what it is. But if that changes, these could be the places to go. Now, Constellation Brands is very low in momentum as well in leadership. You can see we tested here with a new 60 plus day low against the 200. So this is obviously the level that has to hold up. Next one is Kroger. Now, Kroger, I would mention to you last week, is one of my favorite ones if it cleared 40. But this is why know your time frame is so important. Now, this doesn't report for a while, but nonetheless, you can see it cleared 40 and it enjoyed one up day, 2 up days, and now boom, as I'm talking to you today, it's actually breaking down under 40. Now, 40 is just a pivotal area here, but nonetheless, if it continues to go down, we would be looking at this as a potential buy closer to the 50-day moving average, because then you would have a really tight risk, particularly if the real motion indicator holds above the 50. And you could see it had leadership and now it's giving it up. So Kroger is, again, going to be somewhat impacted by rising food prices. But on the other hand, everybody needs to go food shopping. In fact, I went to Kroger, which is Smith's here in the Southwest, last week. And it seemed like spending $300-400 without really buying very much is the rule these days in terms of supermarket shopping. So that's where we're feeling the inflation. Nonetheless, in terms of the stock, let's see what happens here. Now, it's possible that this correction, it turns right back around and gets back through 40. And if that's the case, then I would also be looking, let's say, give it a little more room at a risk to under 39.25. I probably wouldn't go all the way through to the 50 at that point. I'd rather see either a move closer to the 50 or a move back over 40. Next one is Pepsi. Now that did report and reported really well. And you could see what's happened since. It's really basically just coming down in price. We didn't have a reversal pattern. Those of you who didn't watch the video on reversals probably should. It's a very strong pattern. You make a new 60 plus day high, but the next day, if it is an inside day, that's a 2-day pattern, it would still have to close the third day underneath the low of the outside bar. So this low is 154.76, and this definitely closed above it. So around 155.30. So this was not a reversal pattern. So basically all we're getting now is a little bit of consolidation where it finds its next level of support. And I would say probably somewhere around 152.50, if it holds there, might give you another opportunity to get involved with this. The momentum is declining, but certainly nothing alarming, as is the leadership. The next one is one I did not show you last week. This is Adecoagro, Adecoagro SA. So this is South America food products. Okay. Now we know that South America has been having some issues. In fact, the frost issues we just talked about, which skyrocketed the coffee prices. But nonetheless, right here, you had another new 60-day low, and it confirmed the next day. So $9 or just slightly under $8.93 is support. But the momentum certainly doesn't look great, nor does this. So all these consumer staples have a very similar theme here. Would they come back? Absolutely. And I think that they would come back if we see the rest of markets start to tank a little bit, as people start to maybe feel a little bit more nervous about inflation really taking hold and turn to the consumer staples that they need. Otherwise, for right now, it's interesting information. And of course, what we're seeing is the day I'm talking to you is NASDAQ is still holding, the spiders are still holding, the Dow is still holding, and only the Russell 2000, which is still relaying some level of a potential slowdown in the third, fourth quarter, is red. Okay, so now let's go on from there and look at Herbalife. This is a stock that had a lot of controversy a few years ago. I haven't looked at it myself in a really long time, so I was kind of excited it came up on the list as a consumer staple. Now, again, if we just look at good old chart patterns, we have a high here, a lower high here, a lower high here, and now potentially a lower high here. So we're definitely looking at a trend that's weak at this point. However, even though we're under the 50, we are over the 200, and momentum has indeed declined. So this is another example of everything we're just showing you. It could hold down at around 49.30, the 200. It did not have a reversal pattern. You can see this is not 60 days since these lows back here. But nonetheless, with this one, if it were going to get interesting, it would have to be not only an increase in momentum, ideally over both of the moving averages, but also a move above the moving average here, two closes in a row, or somewhere around 52.50. All these consumer staples right now are telling you that there really isn't any major fear in the market. Here's another one I covered last week, which is Bunge. And remember, at the time, well, it couldn't have been at the time because we didn't have this low in, but what's interesting is it made this low right on the 200 and then bounced with a reversal bottom. So what that tells us is, even though momentum not great, and this is not great, what's happening here right now is that it's showing us that it has to hold this 71.73. And if it does, and it starts to take out these recent highs, let's say over 76.40, 76.50, then this might be a good opportunity to get into this. Otherwise, if it starts to break down, and certainly if it takes out this low, then I would say we're going lower again. And I would probably guess our next stop would be somewhere around 65, 66. By the way, it's certainly okay to short any of these names if they break down. But when you're working on these reversal patterns, I would probably say you either wait for a confirmation, in this case would be over 67, 76.50. And then you get in and buy against this risk, or you wait for the actual moving average to break down. Now, one we didn't cover, and this is where we now get more into the cyclicals. This is a consumer discretionary, because in order for you to go out and pay a tremendous amount of money for a cup of coffee at Starbucks, that people have to feel like they're doing pretty good. There was a big controversy about Starbucks too, because you had people like Susie Orman saying, if you save your $4 a day for your cup of coffee every day for the rest of your life, you'll actually have more money in your pocket. I think that's absolutely absurd. But nonetheless, I do know that in hard times, people will not go to Starbucks as much if they can pay a lot less. Maybe Dunkin' Donuts shines at that point. But right now, you could see what happens. Nobody cares about the rising cost of coffee right here. Coffee's gone berserk. This is showing a new all-time high. So again, I know some of you are momentum traders, and if that's the case, with this kind of breakout that we had today, you want to look at this low, 119, as your area has to hold, and make sure that after the coffee prices have gone up today big time, that this doesn't turn out to be, guess what? A reversal top. How will we know? It'll stop going up. It'll break down under 119.07. And then the next day, being Friday, it will close under that. In which case, I would actually think that coffee will actually have somewhat of a bigger correction, maybe back down to the 50. Otherwise, if that doesn't happen, and that's why you have to play this so tight, on a momentum basis, certainly right now, you look pretty good. And in terms of measurements of just how far this could go, it possibly could go up, I'd say maybe to around 128, 130. Now, McDonald's is also consumer discretionary, but I would consider this more of a staple because it's discount. People can buy cheap food there. And you could see it reflected here, even though the prices of commodities have gone up, people are going to McDonald's again. And that's part of the back to work, back to normal life scenario. And we haven't quite made that new high yet. But if we do, over 239.05, Momo traders, you can follow this and see where it goes. Otherwise, now we have to see what happens here. This was not a reversal pattern because this day it did not close below the low over the other day. So this was just a correction when the whole market corrected, which of course, you know, the moral of the story is if the whole market crashes, nothing is safe. But I do like the fact that the momentum is going up and it's starting to show leadership. So I would certainly keep McDonald's on my watch. Another one that I haven't traded in a while, but I used to love to trade is Yum Brands. And I think they deal with Pizza Hut, Subway, couple of other chains. And look what happened here. Big move up over the 50 as I'm talking to you after a new 60 plus day low reversal. So this is what could happen with reversals. Momentum is increasing. Leadership is increasing. So now what we like to do with this is wait for a second day confirmation to close over 117.80. And if it does and you want to buy it, then simply all you have to do is risk under the low of this day, 116.74. We're going to move on from food here. We're going to talk about Expedia. I want you to know that we just booked a trip, the one that I told you in the beginning we're heading on, not leaving the country, staying in the domestic US. But nonetheless, some of it we went right to the websites of the hotels we were looking at, and some of it we went to Expedia. And what was interesting was that Expedia had a little bit of a better price than the websites of some of these hotels. And secondly, Expedia had a much better cancellation policy. So that makes me very interested in this stock right here. So let's see what we have. We do have a new 60-day low and a reversal pattern the next day, follow up the next day, and the day I'm talking to you inside day. That's all healthy. Momentum though, momentum needs to kick back up. I'd love to see it clear this Bollinger Band. And of course, I'd like to see some leadership here. So again, that kind of makes it easy. If this inside day reconciles and it takes out 157.60, then you could buy a little bit and use the low, 163.70. You could buy a little bit and use the low 157.59 to get out. However, if you get in there, you're going to run into some resistance here at the 50. So I'd buy a very small, maybe start a position and then add if we get the confirmation into the new bullish phase here in Expedia. I think that this has potential, maybe not so much for international travel right now, but remember these stocks are forward thinking. And now next one, which is also a consumer discretionary, is gambling. This is Scientific Games Corporation. And Scientific Games Corporation, also in a caution phase, also, well, was this a new 60-day? It was marginal on the 60-day, by the way. So this was at 719 in the last time we were here. Well, yeah, okay, this kind of makes it as a new 60-day low confirmation, and now just getting a little bit of movement down. Terrible momentum and no leadership at all. So with this one, if it holds these lows right here and takes out the highs of this day and this day, which would be over 63.06, then that might be an interesting situation to get in. I like the upward slope on the 50. Get a small position in. If it can't break the 50, get out quickly. And if it does break over the 50, maybe add, especially if it gets a second close over the 50-day moving average. Later on in the summer, we'll start with football again. I know that for many people who do not necessarily watch any other sports, they do tend to watch football. Okay, next one is Boyd Gaming, also in the same idea. And again, a really clean 60-day low under the 200, which popped up above and closed above the next day over the 200. These are great opportunities right here. I hope you rewatch that reversal one while I'm gone. Anyway, this here also, though, needs to show me a little improvement in momentum. We have another inside day forming, which again, if you don't know, inside day means that its trading range of the day I'm talking to you is inside the trading range of the day before. And it needs to get through 60 at this point. I probably would wait for this to clear the 50-day moving average for 2 consecutive days, given the momentum is dicey. Next one is Cake. Long time ago, I did one on restaurants, and I have to say Cheesecake Factory is one of my favorites. Not necessarily the stock yet, we'll analyze it, but it does look very different to what I just showed you in Boyd Gaming. Breaks the 200, comes back the next day, 60-day low reversal, strong, follow through the next day, inside day the next day. So this is a great pattern, a pattern I would write down if I were you. New 60-plus day low, retakes a major moving average, gaps up the next day, then spends the next day after that digesting that move. Healthy, but also clear in terms of risk, which means, again, you take out this day, 52.54. You, of course, will have to deal with the 50-day moving average, but a little starter position with a tighter stop probably would make sense. Or, although the momentum is moving better in this one, you could actually wait for this to take out not only the 50, but it would be taking out all this price action for 2 consecutive days. Okay, Viacom has been an interesting stock because it had this big move up, big move down. It's been sideways consolidation. We've caught a couple of these moves, and now we're out of this. You can see what's interesting here is that the momentum has stopped going down, which is a good thing. And if we get any kind of divergence, which is kind of what happened here, and then it broke down, I would say that with a move back over the 50-day moving average, I might follow it again. I like Viacom longer term. I think that it's definitely got some competition in the streaming space, but nonetheless, it also represents CBS. And as I mentioned to you a while ago, I think that the September, October outlook for Viacom and CBS broadcasting could be positive. For just time's sake, I want to go through a few more a little quicker. Fox Corporation would be another one in the entertainment space, another new 60-plus day low, follow through inside day. We're seeing a lot of these. You should write this pattern down. I mentioned it before. In this case, again, I'd probably wait for a clearance of the 50-day moving average for 2 consecutive days. The next one was another one we covered a while back, which is Disney. Now, Disney looked like it was going to explode based on the fact that it looked like everything was opening up in terms of Disney parks. And then you had oh God, that movie that just came out, Black Widow, also with good sales, although the sales went down over the last weekend. But we had the classic 60-plus day high. Here you go, with an inside day the next day in the breakdown. So now we're working off some of that. So figure somewhere around 170-ish, or this level right here could hold. And if it does, probably at this point now, I wouldn't get involved unless it got back over 179. And again, we'd want to see momentum on that. Disney longer term, a lot of people and analysts are very long-term bullish, but of course that means absolutely nothing. You have to look at the charts, and you have to look at the patterns, and you have to look at your risk, and you have to look at the momentum, which right now is slating not so great. Next one is cash. Cash is financial and banks. And this actually, believe it or not, made the entertainment, which I have no idea why, but it did. And so this one right here is another new 60-day low, follow through next day, only not the inside day today coming off. Financials in general are going to be impacted by the interest rates. Those yields went back down today, which is why we're seeing the money going back into NASDAQ and in the market in general, because it seems to me like right now, if you look at all the bonds, the market still believes that the government and the Fed's going to be there to support everything, and that could be the case. But if that changes, this would be a good one to look at, maybe over that 50-day moving average. Next one. This is another consumer staple, SYSCO. So I showed you a whole bunch. Look at how prevalent that pattern is. New 60-plus day low, follow through the next day. Inverted hammer doji this day, a little bit of follow through today. But at this point now, we need to see something happen with the real motion indicator to clear back over the 0 line, and ideally for this to get back over that 200. But again, that whole consumer discretionary is so interesting right now. I mean, excuse me, consumer staple, so interesting. Now, World Wrestling Foundation is one of my favorites. Right now, though, totally out of favor. Had this huge move up and has done nothing but crash since then. So we're going to want to see some kind of a capitulation with a new 60-plus day low, and we haven't gotten that. We had it here inside day, but it didn't close above that 50 this day. So now at this point, I would say I'd like to see this low taken out and maybe us get closer to 46.45. Then if you get some kind of a reversal pattern, that's what I would look for here. The other way, of course, would be momentum starts to increase, and this takes out the upward sloping 200-day moving average. Next one is MGM, since we had to talk hotels a little bit here. And again, 60+ day low, follow through, up pattern, inside day. My goodness, what is this telling you about the market? Wants to go up, but it's not sure when it comes at least to these consumer discretionary trades. Keep an eye on all of you. You have a lot of choice. 40 here would look good. Over 41.37 even better. We want to see that momentum also following kind. 2 more to go. Another one is Las Vegas Sands. Now this has been on this just huge downtrend for a long time now, months. New 60+ day low did not confirm. You see how well that works? The high that day, 47.95. Next day did not close over 47.95. Okay, so that tells me that this could have more downside, which is also interesting considering that we had Las Vegas opening up big time, but of course with COVID and the Delta variant, the international travel to it would stop. So again, we'll look for another new low and see what happens at that point and follow the news on other countries getting past the Delta variant. Finally, we've got Budweiser. Last week, I showed you Samuel Adams, which is up at over 900. This one, of course, very different. And again, that pattern breaks down under the 200-day, takes it out the next day, closes above, confirms the reversal, gets a follow-through gap up the next day, some consolidation happening here, but momentum not really doing very much. We want to see better on the momentum here. So I would wait a little bit. Maybe if you were going to take a chance, it would be over 70. But I'd get out real quick if it didn't follow through. Otherwise, I would just wait and be patient and watch for the momentum to improve. Otherwise, what we're seeing is the potential of this to have more downside. So the conclusion of all of this is consumer staples and a lot of the consumer discretionary still under a lot of pressure. So even though the rest of the market is doing well, what we're seeing here overall is that the consumers are a little bit here nervous and scared. So keep an eye on these stocks to see when that changes. I hope you all have a really great rest of the month into August, and I will see you all August 19th. Thanks so much, and bye for now.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.